As I mentioned in the daily financial news for October 4th, I had to have this conversation with my boy, Matt, the mortgage guy. How you doing, buddy?
I'm doing great, Mike. How you doing?
I'm doing well. I know you usually catch the daily show in the evening, so you may not have heard the shout out, but I want to tell you what happened to me yesterday because it obviously, I think, impacts your business in your world. So I have a lot of people. Obviously, my network's grown quite a bit because of this channel. There's a mortgage banker, and we could talk about the difference banker versus broker in a minute, but a mortgage banker called me and he basically said, Michael, are you sitting down? I'm like, no, but what do you got? He's like, I just quoted a 10% loan. And I'm
Wow.
like, what? He's like, I just quoted my first 10% mortgage rate. Or I guess it was APR, but anyways, we can get into what that is in a minute, but 10%. And now he did go on to say it was 10% down and credit sub 640. But so bad credit, low down. But dude, double digit interest rates? What the hell is going on?
Double digit interest rates. So anybody who talked about interest rates going to 10, right? Like they like
Congratulations.
with an asterisk, maybe they can claim victory. You know, quite honestly, mortgage rates have gone higher than I would have predicted. And you know, for people listening, I'm a believer now, higher for longer. So I don't expect this to turn anytime soon. But just, you know, to your point of the higher interest rates, I noticed something recently, Mike, and this is a good point to talk about it. I love Mortgage News Daily, and Mortgage News Daily is where I've always pointed people to say, here's what the 30-year fixed, roughly speaking, is. And for whatever reason, that used to be a more accurate depiction of what fairly good credit could get without a lot of cost. Now, as a broker, I've got access to everybody. So I've got 30 plus banks and I can see the sharpest price, the ones with the, you know, biggest margin and the worst price. And if they're at 7.4 on there, the honest truth is, even in the broker world, even with thin margins, you've got to have excellent credit and pay a point or more to get to the rates that are being shown there. So what viewers should know, if you're just kind of rough estimating it, like what can I get if I was going to buy a house? If you're putting 3% down, the rate is worse. If your credit isn't perfect and, you know, 730 is not in the top bucket, you know, so even 730 good credit isn't perfect. If you got any dings, you probably are going to start on a primary residence in today's market with an 8. Now, could you buy it down to 7.5? Certainly. Could you buy it down to 7.25? Yeah, but that's getting more and more expensive by the day. Then you start talking about investment property, higher interest rate. Then you start talking about debt service coverage ratio loans, higher interest rate. I still like have people that are surprised that a home equity line of credit is 11 or 12%. Yeah. And they shouldn't be, right? Because if primary's 8, investment properties mid-8s with a point, you know, and you know, our bank statement loans, our DSCR loans, unless you want to pay a bunch up front, are 9. Like, what do you expect the second position lien to be, right? Of course, they're charging 11 and 12%. So we're in this environment, and like, you know, and you've said before, it just is a number, and it's just part of our calculation. It shouldn't affect your view on real estate and the long-term view on investing. It just means that you got to plug different numbers into your calculator when you're reviewing how to find great deals.
Yeah. One of the things I want to go back to one point, because I don't know that I understand this entirely, but so I'll take a shot, but I want you to kind of correct me or pivot where I'm wrong. When folks say I'm a mortgage banker versus I'm a mortgage broker, this is my understanding. A mortgage banker basically represents one bank. They have their options, and that's it. A mortgage broker has access to 30, as you said, or more opportunities and could shop for their clients. Do I have that right?
Yeah, and there's so much nuance to it that, you know, some people might explain it different than me, but you know, as a mortgage broker, I've got 30 wholesale lenders that I broker the deal to. And because of RESPA and because of the crash, there's a limit to how much compensation can be made. You know, they limited that at 275 basis points. So in California, we run even thinner. We run at 200 to 225. But if you work for a mortgage bank or like a retail lender, a movement mortgage, a cross-country mortgage, they have the ability to, quite honestly, bake in 400, 500 basis points, and they do, right? And then the branch runs off of 200. They pay the loan officer 120. However that structure is set up, they don't even know what corporate is doing because, you know, commercial office buildings, not free. Executives, not free.
Not free.
All the stuff that's baked into the retail pie. You know, I know plenty of loan officers in all channels. And so I won't badmouth it, but the facts are the facts. That in the retail space, when there's more margin built in, the consumer's going to pay a higher price.
Yeah.
Then you've got, you know, wholesale lenders, brokers brokering to them. And so it's no surprise that, you know, somebody on the East Coast that came up with a 10 because, you know, crazy. If I'm 8 and then all the add-ons for lower credit score and lower down payment get me to the high 8s, you know, they might be mid 9s to 10% because there's more margin built in, which in this environment where it's competitive and lenders are trying to survive, they should be, you know, seeing some margin compression and trying to get competitive, but they also got to keep the lights on by making some money on the deals they do have.
Yeah, it's just a wild time. Mortgage, again, we've talked about, we'll probably do this in episode 2. Mortgage demand way down. We'll talk about HELOCs in the second video. But yeah, I thought when I got that phone call, I mean, there are people that have been in the mortgage business 20 years who have never quoted a 10% mortgage. It's here. It happened.
Right. Yeah. Yeah. And for the ones that, you know, have only been around 5 years, 6 years, mortgage brokers, real estate agents, consumers, this is a new landscape for all of them. All of them. I mean, I've been doing mortgage for 10 years and, you know, it's by far the craziest environment for real estate and mortgage that I've been in. So interesting times lie ahead.
Yeah. Well, at the end of the day, you are a mortgage broker. So you see the best of the best. If somebody wanted to reach out to you and not get a 10% quote, hopefully, how would they do that?
Go to greatmortgagebroker.com. Quick and easy form. We're licensed in 48 states. Greatmortgagebroker.com. We're happy to help.
Thank you, buddy.